Hello nieces, hello nephews, it's your Uncle Charles here and welcome back to my YouTube channel where we do unbiased price action analysis. Looks like the SPY gave us another higher close, guys, since September 6th. That's about 6 green days in a row, but I want you guys to notice how the candles are getting smaller though. Usually a sign in this context that the bulls are running out of strength. So one of two things could happen. We can either one pull back or consolidate and chop sideways. Okay, I would be surprised if we go higher and go test all-time highs. Okay, but if it does happen, of course I'd be open to it. I'm not gonna argue with the price action, and for it to happen, SPY would need to clear that 563 level. Not once, but twice that 563 level defended as resistant. You can even refer back to late August, early September. We had a bunch of selling pressure around that area as well. But 6 green days in a row. Let me tell you, FOMC is just a couple of days away. I mean, it is 1 o'clock in the morning as I'm recording this, so it's just a day away technically. But I'm not trusting any move until after FOMC. I'm still gonna trade it, level to level, maybe get some scalp plays here or there. But as far as swing tradable moves, where we get a directional move, FOMC is going to bring the volatility. Uncle Powell is going to bring the fire, and we gotta prepare. All right. So how are we gonna prepare? Well, we're always gonna look at the charts, know the levels, know the setups, and trade it unbiasedly, of course. But we're also gonna look at the option flows. Okay, guys. If you guys haven't been watching the end of my videos, towards the end of my videos, I show you guys the option flow. Definitely pay attention to that. It looks crazy. I saw it earlier. I can't wait to show you guys. All right. So as far as the chart goes, 563 it must clear to go test all-time highs at 565, and of course, if that clears, 567 and higher is in play. We could possibly go test 578, guys. All right. Never say never. And as far as being bearish goes, supports at 562 and 560. Okay, today 560 held that support, needs to break down. We have buying pressure there a couple days in a row, so it needs to break down to cancel out all the buying pressure to put the lower targets in play. 555, 553.4 would definitely be my targets and be a healthy pullback. All right, I'm overall bullish above 555, so that level must fail for me to switch back to being bear bias. Maybe you could send us back down to 550 or lower. All right, guys. So move on to triple Q. We did had a third test of this trend line here. Okay, bulls did not get the higher close for triple Q. Okay, it actually got a little small pullback. But is this a pullback to get ready for a breakout? And if it is for a breakout, 475.5 must clear to put 482 or higher in play. Okay, it will be very bullish if that clears. If it is going to be a legit pullback, I mean, losing 472.7 is a good start, but breaking down more support levels, 471, 469, would definitely be bearish. Follow through and put the lower targets in play, guys. All right. NVDA also had a nice little pullback. It had an inside candle setup from last Friday, so it's a sign of consolidation. Did close lower today, okay, but there is that critical level, fib level around 116. Still managed to close above that, so right now it's just looking like a healthy pullback of a critical level. But if it is to be very bearish, got to break down 116 to put 111 or lower in play. 116 must fail to get bearish. From here, now that we got the pullback down to 116, to trust the bounce, 118 needs to clear. It held as resistant today, but if it can clear tomorrow, then more upside will be possible. 120, 122, 125, and all the way up to 128 would definitely be a possibility, guys. Tesla, unfortunately, the breakout did not hold. That is a false breakout setup, so as of right now, it's kind of looking bearish. Guys, remember, if you're able to manage your risk and cut loss and keep your loss as small as possible, that's a win in itself. Remember, majority of retail traders cannot manage their risk. Okay, that's most people's weakness. If you can overcome that, you're gonna be ahead of the game. So don't beat yourself up. All right, there's always another trade. However, it still managed to close above that 226.5 fib level. So bulls have some hope. But if it is going to be a bounce, 228 must clear tomorrow. If 228 clears, definitely would be bullish. Play it level to level, right? Level to level. So if you long 228, you want to look to take profits around 230 and then leave runners. If you're going to swing the runners. So if you buy 10 contracts, leave like 3 or 4 contracts as runners, or whatever your risk tolerance is, okay? But if we lose 226.5, that's bearish. That's very bearish. Put in 225, 223.5 in play. That held today as support. But if it breaks down tomorrow, very bearish with 220 and 216 in play. All right. So above 228, look to long. Below 226.5 and 223.5, look to short. What am I missing? Let's take a look at IWM. IWM managed to close a little higher. It had a gap up, and it gave us a doji candle. We got to be very careful with this one because we have a big body green candle followed by a gapped up doji candle. This could be setting up for an evening star pattern. Evening star patterns are very bearish, okay, guys? So watch out for a gap down if it is. There's a gap down. Breaking down 216.4 would be bearish. Put in 215, 212.6 in play with the gap fill at 211-ish. All right, so if we break down 216.4 and 215, guys, that could be bearish. Could be an evening star pattern playing out. Now, as far as the bull case, it has to clear 218.3. If it does, 220 or higher is in play. 220, 221.8 or higher would be in play. But it has to clear 220 to be bullish. All right, now let's get to the option flow in the dark pool. Let's take a look at what big money is doing ahead of FOMC. This is the dark pool level. Once again coming in at 562. This is happening 2 times in a row, guys, where a lot of dark pool level coming in around 562. The last time I seen this was around 540, and you guys seen what happened last time around that 540 zone. Now we're saying not once but twice coming around 562. Now if we look on the candles, is resistant at 563. So it doesn't quite match with dark pool, but hey, that's what dark pool is showing me, and I don't think we should ignore it. And look at that, 2.3 billion in premiums. The amount of premiums going up, that's a sign that volatility is incoming, guys. Big moves are incoming. 473.2 is the highest dark pool level for triple Q, and then the other one's at 475.43. Add these levels to your charts, guys. This is where the big money are getting busy. All right, IWM 216.86. Tesla is 226.78. That's where most of the activity is. And NVDA 116.78. All right, now let's get to the option flow, guys. What contracts are being bought and sold ahead of FOMC? So I'm here on SPY. I'm going to go to the filters. Look at the $100,000 premiums or above. I want to see what big money is doing. All expiration date. I'm only going to look at above the ask. Look at the sweeps and out the money. Why? Because I want to see what the most aggressive plays are. And guys, it is 100% bearish. $4 million. All right. Remember, these are being bought. This shows are being bought, but somebody's also selling them. But this is what is being shown. This is what the most of the money's going into puts, guys. So a few of these contracts are expired. This is September 16th, September 17th. They're going to be expired, right? But look at this, December 20th, 534 strike price. 534. That's over $650,000 in premium. It's a crazier one right here for March 21st, March 21st, 2025. 510 strike price. $2.4 million. Okay, guys. So we're seeing what big money is doing ahead of FOMC. There's a lot of puts being bought. There's a lot of puts being distributed or whatever, being moved, if you will. Okay. Now let's take a look at what Triple Q is doing. Triple Q is also showing bearish as well. It's matching with the SPY. The most aggressive puts, the most aggressive contracts are being bought are puts right now, guys. IWM bearish as well. That's a 206 strike price for October 18th. Wow. Do they know something that we don't? Now Tesla's bullish, okay? It's not matching the indices, but you know Tesla is a stock, it's an individual stock. The indices there is a combination of a lot of different stocks, but Tesla's own stock, so you know what I mean. It's showing bullish. 270 strike price for November 15th. Wow, 240 strike price for October 18th. This is what they're doing for Tesla ahead of FOMC. That's a lot of big money, and that's aggressive plays if you ask me. And it's also bullish for NVDA, but you know a lot of these are expiration date for September 20th. It's not that out the money. 120, 117, 120, 119. Not too aggressive for NVDA. Nothing that really sticks out to me, okay? But as far as the indices, guys, they're all bearish across the board. You guys seen it with your own eyes. And I hope you guys found value in this. If you did, please give this video a like. Please subscribe if you didn't. Good luck tomorrow, guys. Peace.